Welcome back. Now, Discovery has reported strong growth across its operations in the year ended June. The group's banking division recorded its first profit in the second half while growing new clients by 30%. Discovery said this was a strong performance in an environment characterized by increased geopolitical complexities and uncertainty around global policy shifts and trade tensions. CEO Adrian Gore joins us now for more on the year that was. Thank you so much for your time, Adrian. Let's actually start off there. Navigating this environment. And Discovery is one of the many companies that highlight sluggish economic growth and elevated risks. So what were the key levers to pull here to ensure upward momentum in this period of the growth phase for Discovery?
Well, I think the economy, and I think around the world, is complex, volatile, and very, very risky. But the reality for us is that if you actually look at the underlying trends that drive our model, it's more about demographics, it's more about healthcare systems, and a lot of that stuff, in fact, is directionally very much in line with what we are kind of building our Vitality shared value model. So virtually in every business we're in, we're kind of getting increasing traction. In the South African context, all of our businesses did remarkably well, and the bank was obviously quite a fundamental issue, a turn to profitability. So despite a very complex environment, in fact, the performance was a function of virtually all of our businesses across the board. There wasn't one kind of standout that, blew the lights out. It's been a tremendously important period for us.
Well, actually, I want to drill into that. Very interesting what you said about technological and demographic trends that really provide an underpin for your unique growth position in the market. Just expand on that for us.
Well, I think, if you look at, there's a few forces here that I think are quite profound. If you look at technology, AI, and I don't want to overhype AI, but I'm saying that the reality, the power of data, and the power of using that to actually personalize the offering we're doing, especially in Vitality, is critical. We're seeing massive changes in technology. GLP-1s, Ozempic, Manjura, those kinds of things are changing the face of healthcare. That is brilliant stuff, but it drives costs up. So that's a challenge. Then on the demography around the world, countries are getting smaller. People are aging. The birth rate is down. They're depopulating. So you have this situation, like you said, in the UK, where people are older, they're sicker, and therefore governments have to provide more healthcare, but they're under fiscal strain now with debt, etc. So all of this points to our kind of products, health insurance, long-term savings, etc., growing in importance. So no hubris. These are very complicated markets, and you can get into all kinds of difficulties. But in the main, the direction for us tends to be growth. And I think the kind of performance of the group is a function of the ability to get market share, even in markets that are stagnant. We tend to be very competitive and gain market share. So Discovery Bank, I think, is the fastest growing bank now in the country. In a very competitive, kind of excellent banks here, we're doing very well. So, that's, I think, I've never had this, no hubris here, but I never want to complain about the markets being stagnant. That's why we haven't performed. We don't perform, it's shame on us. You know what I mean? And credit to our team. They're really committed to growth and success and impact.
Okay, well, in this challenging environment, for businesses such as Discovery, new business numbers also tell a story. I saw that there was an impact to new business growth in some businesses. What growth dynamics are playing out there when it comes to new business?
Well, I think there were maybe a few forces at work, and things like the bank and Vitality, like we shot the lights out in growth. In other areas, particularly take Discovery Insurance, did really well. We were very careful on pricing. So we were quite comfortable to take some reduction in terms of quality of business, and we kind of showed an analysis of the quality of new business. In a business like Discovery Life, we fell behind the expectation. We should do better. So it's it's quite tactical. I'm not overly concerned. I think we're in a very strong position to grow where we need to grow. Not an issue.
Okay. And in terms of just the banking side, lending is a key lever of growth for banks. What's playing out in terms of lending, demand and supply at Discovery Bank, particularly with more products being rolled out?
Look, the advances book, I think, grew over 30%. So the lending has actually been very successful. We've always been very conservative in how we built the bank. The bank in its early phases, we would make sure it was double funded. Deposits were bigger than advances by a factor of 2 times. And we've kept that conservatism. But we rolled out home loans some time back, not a few, I forget when it was, but we were already 2 billion in terms of advances on home loans. We rolled out personal loans now that are now ratcheting up nicely. So we've got an exceptional customer base, of quality. So you see the advances book has grown, but in fact the kind of credit loss ratio is probably half the market. So, we've kind of stepping very carefully as Discovery Bank grows. And I think, we should do that.
And as we're talking about growth and we wrap up the conversation, Adrian, in terms of the next 6 to 12 months, what kind of growth is Discovery eyeing at this point?
Well, we've spoken about this growth corridor of 15 to 20% over the 5-year period. We shot the lights out a bit this year, 29%. I think it will moderate down into the corridor. I'm not sure what the next year will be. We'll see how it play out. But we kind of more focused on the longer term corridor of 15 to 20%. I think that if the bank continues to scale, we have a fantastic launch coming up in Europe, particularly globally on Vitality AI. I'm very excited about that in November. A lot to do, so no arrogance or hubris. We'll see how it plays out. But a lot of really exciting stuff in the group. We'll see. These are good times. Difficult times, but good times.
Yeah, amazing. Well, thank you so much for your time and giving us more detail on the numbers that came out from Discovery, Adrian. That was Adrian Gore, CEO of Discovery.